Hello and welcome back. Hope you're good, doing well, and having perfect holidays and back to trading. So we're gonna talk about the the market. And the possible next move. For upcoming weeks. For the current week from 6 June to 6 January to 10 January. Okay, so let's move on. Let's look at the market. So first of all, we're going to look at the dollar. So dollar, we were expecting dollar to rise before the. I hope you can hear my sound is okay. Sound is perfect on your end. You can hear me. Just type yes if you can hear me. The sound is okay. Yes, I stopped going live on YouTube, so this might be a reason you are checking it up after a long time. But we are live every day in the room. So we were expecting dollar to rise simply before the election. If you guys remember that, so we were expecting this move to appear over there on the dollar, and dollar is rising since October. Market was simply preparing for the election, and the dollar was being bought based on Trump victory, and we got a tremendous move on the dollar because of the US elections. Okay, so I'm quickly going to look at the 2016 to just let you know that what we may expect from the dollar after the 20 January. So if we're going to look at the 2016, so we got a tremendous strength on the dollar because of the election, and market was expecting that Donald Trump gonna win the election, and because of that we got a tremendous strength on the dollar. So just a little comparison, 2016 and 2024 for Trump victory, and then we're gonna look at the others. All right, so I'm gonna go to the daily chart, and daily chart back in 2016. So we had election in November in 2016 when we got victory, when Trump got victory. So we got a nice run for upside on the dollar here, and we got a nice run here in November. Okay, so November there, November here, we got a nice run over there in November. And I mean in 2016 when Donald Trump won the election. And similarly we got same move when Donald Trump got the victory, and then we got then December holidays came, and dollar went into a correction. So similarly December holidays came and dollar went into correction again. Then we got another push up over there in January, and January started, we got another push up over there, and now we can see that the dollar is struggling to push more higher. All right, and this is what we are expecting dollar to do, at least to remove all those gains which we had over there because of the election. There are multiple reasons which are driving the dollar to continue to keep going higher. Yeah, not just the election. Okay, but once we can see that the Donald Trump going to be in the office, all right, market is just buying the dollar based on that Donald Trump going to be really hard on the tariffs, and on the other side, Fed paused the interest rate cut. Fed is also waiting how this new government going to look like, and how either they are going to be inflationary, their decisions going to be the tariff policy is going to be inflationary, or once Donald Trump is going to be in the office, so they may not going to be as tough as they said while they were campaigning for the election. So this is what was the reason the dollar was being bought, the main reason. Okay, the election. On the other side, other central banks, they were cutting the interest rate, like the ECB, and other central banks like Bank of Canada, they were cutting the rates aggressively, especially ECB. As we can see that the Europe is struggling. Europe growth is really struggling, causing the euro to continue to keep dragging lower. Even ECB wants lower euro to have some growth. All right, so there are many factors, as I said, that which were driving the dollar higher. So Fed pause was the main factor last month, which gave us a push up on the dollar. All right, once we're going to have new government, all right, and their policy is going to be in place, we're going to see dollar going to start reacting to the Fed rather than the Donald Trump. All right, as we can see that the inflation is falling in the US, sticky at 2.70. More likely we're going to see that inflation going to drag below, like we are having falling inflation in the other countries. So interest rate in the US is really high. 450 is very, very high. So I'm expecting that they're going to cut the interest rate very, very aggressively in 2025, which can drag the dollar lower in the rest of the 2025. So that's a longer term projection. All right, but for the January and the February, we are expecting dollar to start falling once Donald Trump into the office, and behave very much similarly like it has done back in 2016. All right, so this is the dollar forecast. All right, and dollar to just behave very much in the same manner like it has done back in 2016. All right, so once you understand the dollar, then you will understand what the rest of the market can do, or where they can go. All right, so if I'm gonna look at the current chart, we got a really big move over there on the dollar, a nice aggressive run over there. Now we are expecting. Okay, so the other factor which cannot let the dollar to continue to keep rising is the inflation. All right, so if I'm going to look at the inflation chart quickly before going to look at the dollar, so that you can understand that why dollar should not continue its bullish move. So this is the US inflation. Okay, so we were expecting, if you remember that chart, so we were expecting inflation to decline. All right, so inflation started to fall in the US from 9.1 to 2.7%. So it's sticky at the 2.7%. All right, and the 2% target is here at this area, and we are expecting it to even fall below 2%, as we can see that the inflation has significantly fallen in the other countries as well, especially in the Europe. So if I'm gonna pull out the Fed fund rates on it. Okay, so we can see that the rates are also falling. Fed started to cut the interest rate. I have mentioned that chart before, if you remember the previous one. All right, so rates to come from that top. So Fed started to cut the rate. They are still lagging. All right, so they are lagging. They have to cut the rate. All right, they have to keep cutting the rate till they come to meet their target, which is 2%. So interest rate still has to continue to keep falling in the US. So inflation can dip below 2%. All right, and Fed has to continue to keep cutting the rates. All right, so this is dollar bearish. Okay, this is dollar bearish. So this is not dollar bullish. This is longer term projection. Rates needs to continue to keep dragging lower, is a dollar bearish. And very much likely we're going to see that scenario going to play out in 2025 and 2026, in this year and the next year. So Fed said that they're going to pause the rate at the current 450. Yeah, so 450 is here. So 450, and going to see how the new government going to unfold, and then they're going to start adjusting their policy. So what Trump is saying, that they're going to put the tariffs are inflationary. All right, so inflationary. So if Trump is going to be really hard, all right, so there is little chance that the inflation can jump. All right, but not as much high as we have already seen, 9.10. I don't see we are going to see that high anytime soon. All right, so little push can come. Then again, we're going to see inflation back to 2% or below 2%, as tariffs going to be global tariffs. They're going to slow down the global growth. All right, which is disinflationary. We can see jump in inflation in the US, but the rest of the world going to be in a bad situation, in a very bad positions. Growth can be impacted by the tariffs. So when other countries gonna start facing the disinflation, all right, so we're gonna see the similar trend back in the US as well. So I don't see inflation is going back to the top, or even going above the 4%, 350 or 4%. So this is a longer term picture which is gonna play out. Rates to continue to keep dragging lower. All right, and dollar is bearish based on this bigger picture. So other countries, they are already facing that situation. They are cutting, inflation is falling, and they are cutting the interest rate. All right, and their currencies are falling because of that. All right, their currencies are falling because of that. They're gonna find the bottom sooner or later, and dollar, which is up against them. All right, so that gonna play out. That gonna start to continue to keep falling. So have shown that picture before as well. So this picture is playing really well, and rates are coming down, and that's the main reason we're gonna look for the dollar to continue to keep dragging lower once Donald Trump is in the office. All right, and the dollar to play in a similar manner the way it has done back in 2016. All right, so this is a bigger picture, higher time frame picture. So what you're expecting on lower time frame, all right, so we are still in a trend. We can see that the trend is still intact over there. Okay, so if I'm going to look at this, the moving averages, we can see that the trend is still intact. All right, we are having corrections, price is correcting, and the dollar is pushing higher. All right, so this might be another correction for another push. Okay, so we can see that how the structure gonna look like. Ascending channel, or price is just simply running within that wedge. So if I'm gonna remove that, those indicators, moving averages, and so this is what the structure we are having. Okay, so short term we still may see another push up, but longer term we're expecting it to continue to keep dragging lower. So we still may see another push over there. All right, even though I'm not anticipating, I'm anticipating it to the dollar to continue to keep dragging lower, at least up to this area. All right, at least up to this. Remove these gains. All right, the gains which we had over there. So the move which we are having, I'm anticipating this move to continue to keep dragging lower. Remove these gains at least up to this area. So within this structure, we still can see another push up over there. All right, so once watch price action over there. If price hold, look for another leg short term higher. Right, and when price tests that top or new high comes, the way structure is showing, you are looking at to continue to keep falling to the downside. All right, so we still can see another push higher within that wedge. Okay, so it's at historical price. So we are testing. This is you know, a historical high. This is historical high when Fed was raising the interest rate. All right, when we were expecting buys to come. Okay, and it was just keep running for upside. All these charts were running. All right, and then we were expecting on a bigger time frame dollar to start falling from that high. All right, and we got that move, and then we pushed back up after hitting these lows. All right, and it's coming close to that high again, back to that high. So very less likely that we're going to continue that trend. Okay, more likely that we're going to start reacting to the policy, the Fed policy. The Fed policy is that rates needs to fall and dollar has to go to that direction. So the bigger picture, right? And for our time frame picture is that we are expecting it to fall from every time, and you see that the new high is just coming over there. All right, that's a bigger picture for our time frame picture on the dollar index. And if I'm going to look at the other charts, so other charts are very much similar. So CAD is almost has completed the move. Let me find that, this bigger weekly move. All right, so this bigger weekly move is completed. All right, and then and now we are expecting it to drag lower. All right, all the way back to this low, or at least within these average prices. This is the average price, so 142, 132 within these areas. All right, so dollar CAD is also at a good spot where you are expecting it to do in a similar manner. All right, and the chart is very much similar like the dollar index. So I'm gonna pull out a trend line over there, so the trend is still intact over there. All right, and here I'm anticipating right now a correction over there, a 4-hour time frame correction, to price to stay within these ranges for a while on lower time frame and correct over there, and then to drag lower. So very much similar like the DXY. Another push is possible. All right, and every time when you see that the price is forming new high, you are looking to counter it. the price we have seen, the highest price on the dollar CAD we have seen is somewhere close to 47, 1.47. all right, during the, let me go and look at that, during the March, the March 2020, okay, when we had COVID, oil went below to zero, negative prices you have seen here, right, and then dollar went lower, and again dollar CAD went to the high, the price was 147, and then big drop, all right, and then recovery on the dollar, then again a big recovery. So if something unusual happens, then you can expect it to continue to keep pushing more higher, and dollar and oil to go into the other direction, oil to fall. So right now you can see that the dollar is staying above 70, all right, and dollar is just rising. Yes, so factors I have just told you, the factors which are driving the dollar higher. There is also government is collapsing in the Canada. New prime minister is on its way. Yeah, so the chaos is there, causing the CAD to continue to keep falling, right? But the bigger picture is that we are looking for dollar to fall against the CAD. Again, the Fed policy, all right? So the counter, every time when you see that the new high is just coming over there, it is coming close to the 147, the historical price back in March 2020, all right? Still another leg higher is possible. If it goes for another leg higher, you are looking for it to fall or counter, right? Fall for a big time or just counter for another corrective move like this, all right, like this, or a big drop to the downside. So on lower time frame, all right, on lower time frame we can stay in these ranges for a while, within these ranges for maybe for this week, and then we may see the direction of this on this after next week, all right? So we still can push for another leg higher like that, okay, for short term within these ranges. A big 4-hour time frame corrections can appear over there. All right, so again, as you can see that the dollar index, I have explained the dollar index, these are the inverted, you just need to invert those charts, picture is similar, and if I'm gonna look at the wait a second, so if I'm gonna look at the euro, okay, so euro is also at a historical price, next close to parity, this area, right? The parity is at the 1 at this area. Risk is there that the euro can drive to parity, another leg lower can appear over there, all right? So euro going to be a big buy. I said that the election was driving the dollar higher, all right, and we were expecting the euro to fall, all right, from this area and this move to happen. So we had that bigger move over there, and now we are expecting the rebound, all right? So the rebound, okay, so similar, just need to invert the chart, similar like the DXY, invert, couple of trend lines on it, trend is there, similar like the DXY, correction was there, all right, and you can draw like this, okay, arrows still can push for another leg higher, which can drive it to push higher, means push down, all right? So the chart is inverted, which can drag it to parity, right, and then reverse. So if I make it very much simple, whenever you see that the new low is coming over there on the euro, okay, you are looking for it to buy for longer term, right? And every time when you see that the price is pulling back, like on a 4-hour time frame, a deeper pullback, like it has done already, all right, and struggling to push more higher, one more leg lower with the trend, all right, looking for a bigger reversal with on dollar, bigger reversal for upside like this, okay, and still another leg lower is possible with the trend, always possible till it goes to parity, All right. So as I said that dollar CAD can stay sideways for a while. Okay, so we may see that the euro can drag up to these ranges up to 35 again. We may see another, it can stay sideways within this area before we're gonna see the next move for upside. So this is the another leg lower is possible on the euro. All right, and euro can stay within these ranges for a while, within these ranges. So short-term sell opportunity was over there at this area, all right, which is already appearing over there, and all right, so let me bring a chart. All right, so this is the chart. We were expecting, dollar CAD yesterday to stay within these ranges. All right, yesterday we were expecting dollar CAD. We got an aggressive sell-off, very much similar like the pound. Pound went lower. We were expecting dollar CAD to go down too, and then we got a rebound. Donald Trump said that Donald Trump just declined the Washington Post regarding the tariffs. So we got a bounce back, and then we were expecting price to just fall back within the sideways market. All right, very much similar like we are having on the pound New Zealand dollar. Okay, so this is the formation we can see on the euro dollar. All right, or on the dollar CAD. All right, dollar CAD, or on other dollar pairs. All right, so that's the point. Okay, so short-term sell opportunity was over there from that top back to within these ranges where the price is right now going. All right, and then again we may see some short-term buying. Price can stay within these ranges like you have just seen the chart on the pound New Zealand dollar. All right, and on the bigger time frame, as I said that, okay, so another leg lower still possible. Right now we don't have any sign that this new low is coming. All right, right now we don't have any indication at the moment that we're gonna go all the way to the low. All right, but be prepared for that. Right now the indication has shown that the price can stay within these ranges. All right, so from 145 to 135 for a while before we're gonna get a direction over there on the euro dollar. All right, so very much similar on the pound. All right, so pound carry a risk for a crash. Okay, pound definitely carry a risk for a crash. All right, let me explain to you again why we may see a big crash over there on the pound. Pound always carry a risk for a crash. We may not see, all right, so we don't know either the crash is coming or not, but the chances are very much high that the crash can happen over there on the pound. All right, so if I'm gonna go and look at the all right, so first of all we need to explain technically, all right, the fundamentally, then we're going to talk about the technicals. The fundamental reason why we can see the crash on the pound is that the inflation has significantly fallen. Okay, same chart again, the chart which I have shown on the US, little thick line. All right, and if I'm gonna pull out the interest rate chart on it, okay, so there we can see that the interest rate is really high at the moment in the UK. All right, this is a huge gap. All right, so a huge gap. All right, okay, Okay, so rates are lagger. So we see inflation moves first, inflation went higher, then central banks started to raise the interest rate. All right, and we can see that inflation has fallen. All right, but central banks, they are slow to cut. They are behind the curve. All right, and inflation, you know. All right, so why Bank of England is little cautious? Okay, so inflation has fallen already below 2%. All right, back in September, first September, right? 1st September, we can see that inflation went lower below 2%. So 2% is their target, fallen. All right, they cut the interest rate. All right, because of cutting the interest rate, we have seen little jump on the inflation. All right, little push up on the inflation. Went up from 1.70 to 2.6, almost 1% rise we have seen over their inflation because of this. All right, because of this. So holding rates higher for much longer from the central banks gonna cause the growth to die. All right, so holding rates higher over there for much longer, all right, means that growth has already fallen, I mean, close to zero. All right, close to zero. So we are not having growth, much growth in the UK in the last couple of months. So negative GDP we have seen on the last data was negative in the UK. All right, so inflation can significantly fall below to 2% in the UK, means that which can put pressure on the Bank of England to start cutting the rates very aggressively. All right, and that can you know, create a panic on the pound, and pound can crash. All right, pound can crash significantly to the downside in 2025. All right, so there is a significant risk for the crash on the pound. So whenever you buy a pound, make sure you keep that thing in mind, that the pound can crash because of this policy. Bank of England is behind the curve. All right, why they are cautious for killing the interest rate? They are cautious, you know, they don't want inflation to jump, to push back. That's why they're cautious. But once inflation gonna, I mean, below the sticky point, this is a sticky point, right? Below the sticky point, it will force them to start cutting the rate aggressively, which can drive the pound aggressively to the downside. So far, which is why pound is holding higher against the dollar rather than as with compared to the other currencies. The other currencies are significantly lower, like euro is lower against the dollar, but pound is not at those levels which we have seen on the euro. All right, is the rates are higher rates are holding the pound at stronger levels. All right, now we need to compare the pound with the euro. All right, if I'm just simply going to pull out the euro, okay, there we can see that the euro is very well ahead than the pound. All right, and testing the all right, and it's testing the, all right, so this date lows. All right, this date low, there we can see that. So it's testing the November lows, November 2020 lows, while the pound is very well behind or lagging, we can say that, or still stronger. All right, so the pound is still stronger against the euro. So this is the risk. All right, this is the risk over there, that the pound can crash. Pound can crash, you know, much lower towards 115. All right, so 115 is you know, is not a good price. All right, is a very bad price on the pound. But at least there is a, let's just be realistic. All right, so it can crash up to 120. All right, so 150 is a deep hole. All right, so let's just be realistic. and 120. So we were expecting it to fall up to 122, since that move started. Before that, since we were expecting it to draw from that top, we were expecting it to fall up to 125. All right, and still we haven't seen any recovery yet on recovery means dollar is still up. All right, as I said that we're expecting dollar to fall after once Trump in the office. All right, so far we don't have any sign yet that the dollar is set to fall. Right, so there is still chance that a pound can play a catch-up move and can drag aggressively lower, at least up to 120. All right, so 120, there is a risk that the pound can crash up to 120, and if it goes to this low, all right, so yeah, there is a risk. There is always a risk. All right, the other currencies are testing the extreme lows, like Australian dollar is already testing that low, the 2022 lows. All right, so pound is still holding the gains just because of the higher interest rate. All right, and carry a risk for a big drop over there, very much similar like we have seen back in there before 2020. This was the crash. All right, pound always does that, always lag behind the others and suddenly start crashing to the downside to play a catch-up move. Okay, so what is the point here? What is my point? The point here is that if you're looking to buy a pound, all right, you have to be really careful. You only can start looking for buy once there is a decent lead that the dollar is going to fall. Pound always lag, and will give you enough time to start buying once you see that there is enough indication that the dollar is set to fall. Okay, so that's a point which you need to keep in your mind, that when you are looking for buy, that the pound still can crash to the downside. So always look for pound to sell when you see that the dollar is still gaining. All right, so very much similar picture like I've shown you on the other charts. Okay, so crash risk is always there, right? So one more push, and longer term we are expecting dollar to go down, all right, and pound to also follow up that. So pound still can drag up to 120, means that one more leg, all right, one more leg lower can fall. So very much similar structure of formation like I have just shown you, all right, like on the DXY or on the euro. All right, so similar sideways market can still stay for next couple of days for our moves. Okay, price can stay within these ranges, all right, like this as shown, right? So right now on lower time frame, that's what you're expecting pound to stay sideways, okay, within these areas. Okay, so very much similar situation here on the Australian dollar. Okay, so we are at a historical lows again on the Australian dollar. Last time we got a nice move up, all right, from these lows, and then we got we got a drop. Okay, I do have charts back in at this place on Telegram. You can find those charts. We're expecting this move to come, all right. This is a very big move. We are still in this bearish trend, okay, but as said, fundamentally we are expecting this to rebound. Okay, the other reason that why Australian dollar is more bearish as we compare to the pound or the euro, all right, is the China. Okay, China is struggling more. If we're going to look at the Chinese currency, they are having more problem. They are having simply more problem at the moment than any other country. All right, so inflation is, again, if we're going to look at the inflation chart in the China, they are struggling more than any other country at the moment. Okay, the rate is still high. It means that more interest rate cuts can come in the China. They are feeling the pressure. All right, so inflation went to negative, disinflation, all right, and then little push up. So we stuck at the 2.2. All right, so target is 2% inflation to push up to for 2%. So interest rate cut simply can come over there from the China. So CNINTR. All right, so they are still having the interest rate at 3.3. all right, so 3. So this is what I'm having according to this chart. All right, so 3.1%. So means that they can cut the interest rate. They can there is pressure, so pressure is on the China to ease the policy. All right, so which is actually putting pressure on the Australian dollar to stay under pressure. Okay, that's the main reason that the Australian dollar, also we can see that the currency has gone much higher. Dollar has gone much higher against the Chinese yuan. If I'm going to invert that chart, I'm going to pull out the Australian chart on the right side. So it's loading. All right, so we clearly can see that we are testing the lows, okay, which is back in again October. So we formed a new low back in October 2022. All right, so October 2022. So we're testing that low again. And if I'm gonna look at this Chinese yuan and invert that chart so you can match that chart. All right, so there we are having the same date. All right, so October 2020 lows at this area. So there is pressure on the China to not let their currency to get more weaker. All right, and some intervention can happen over there from the Chinese People Bank of China or people or Bank of Japan. All right, as we can see, the dollar is also strong against the yen as well, so some intervention can drive the dollar lower. So there are multiple factors which can drive the dollar lower once Trump is in office. All right, so not just these factors. All right, so we can see that the dollar yen is also at intervention level. All right, so intervention here as well. So we may see intervention. So multiple factors which can drive the dollar lower. All right, so that's the reason. Okay, that's the game plan. The game plan is looking for longer term reversal on the dollar and short term still staying with the trend. All right, so let's get that chart, and if I'm gonna invert, if I'm gonna make it correct. All right, so longer term, once you get a good entry from the lows, then you're looking to hold it for some couple of months. So that's what you're looking to plan for longer term trade. If you don't want to hold that, don't want to trade that way, all right, then simply trade for short term. All right, the way you like to trade. All right, if I'm gonna invert that and gonna pull out the trend line. Okay, so similar structure, similar moves, everything is just copy paste over here, like I have shown you on the DXY. So similar formation, okay, similar price action, because there is dollar, right? So dollar is the main reason for the same structure. So another push is possible. All right, the longer term is reversal. All right. Okay, that's what you're looking, very much similar like the euro. So for short term, for lower time frame, this is where the price is, right now, the indication which we are having that the price is going to struggle over there for a while within that those ranges. The rest is 62 to 63 within that 100 pip range. Okay, so still a short-term sell opportunity was there at this area for price to stay within these areas. Okay, and then yeah, a couple of times we can, as shown earlier, so we can stay there over there. So stay trending for short term, right? And once price is at the new low or at the previous low, then you're looking for longer term reversal. Same on the New Zealand dollar. Okay, same analysis. Don't think I need to talk about that much. Even the New Zealand dollar is much lower as compared to the others. Okay, it's testing the March 2020 lows. All right, not March 2020 lows, I think. Yes, March. So that's this March 2020 is a COVID low, COVID 2020 lows. All right, then we got a nice bounce off, another reversal. So expecting a longer term bounce off on the New Zealand dollar, all right, or at least price to go back within these ranges up to 64. So there are multiple reasons for the big reversal to happen on dollar in the first 3 months. All right, so first 3 or 4 months of the 2025 dollar to fall for a big. Okay, so on lower time frame, so a 4-hour time frame, same structure, same, invert the chart, pull a trend line. All right, so same formation over there. All right, and if I'm gonna pull out a trend arrow, one more leg, longer term reversal. So this picture is not going to change. I mean, this picture means this structure. All right, still trending, new lows, looking for long term reversal. All right, so when pulling back, if we have enough indication that the trend is still intact, one more leg lower. Okay, that's what we are expecting since within these areas. Okay, so charts are there on the Telegram. We were expecting a big drop from this. All these were nice moves happened over there within these areas since October. All right, since October, nice continuation in these areas, these legs, and we had a sharp sell-off over there because of the news. All right, and we are still in a trend. So charts are there on the Telegram. I have posted some of charts over there on Telegram. All right, on the New Zealand dollar. So same picture. If I'm gonna go to the 1-hour time frame, look at the ranges again. 100 pip range is still likely here within this area, right, for some time before we get a direction. Okay, so sideways market within these areas. Okay, so gold is simply a bullish projection, bullish story, buy and test the previous high. I don't think so I need to talk about much on the gold. Gold is simply a buy, and we are simply expecting to hit the 3000. All right, the 3000 is the target. If you have seen my previous charts, we were expecting it to go up to 27, somewhere here within these areas. Charts are there on the Telegram. All right, so within these areas, so we were expecting the next leg. So we are still expecting gold to reach to 3000. Why? Again, inflation is at close to 270, right? 2.7. Interest rate is 450, right? Interest rate to fall from 450 to 2% is a bullish story for the gold. Okay, and lower interest rate in falling inflation is basically a bearish sign for the gold. Okay, but we are simply expecting gold to behave very much similarly like it has done in the previous bearish interest rate cycle. All right, so gold remains trending here in this area, right? So 2019, right? So 2019, and then we got a next move, and here we got when the rates were coming down, it was rising. All right, so very much similar like the goal to at least continue to 3,000 in the falling rates. All right, yeah, so it has came down a little. Okay, on the other side, if you see that the gold is going higher, okay, that means the bottom is in place on the other on the risk on currencies, which I have just shown you already. So if I'm gonna make it, you know, little clear, all right, so little clear means the trend. Okay, the trend is pretty strong, we can say that, and so many things are happening already in the world. Okay, means that still looking for it to stay trending for upside. Okay, or simply let's just pull out the moving averages. Okay, so we are still holding these lows, all right, these areas. So simply continue, okay, up to this top, or as I said, that the target is the 3,000. All right, so the target is 3,000. Okay, so this is daily chart, and we are holding that trend lines. Okay, we are holding the trend. The trend started to appear from there, staying above the moving averages. Okay, hold the trend, holding the trend again. Okay, holding this 25.90 areas, and the short-term target is this, the 27, and the medium-term target is this previous high 2800. All right, and longer-term target is the 3,000. Okay, so bigger picture, if I'm gonna look at the lower time frame, all right, so all these ranges which are, you know, holding right now, price is holding these ranges, so is a good place to look for it to hold and buy within these areas. Right now it has moved away. All right, it has already moved away. So these, I mean, let me pull out a rectangle over there. All right, so these are the places you are paying attention closely for the gold to hold. So if I'm gonna look at this, the trend is just building over there, right? This trend, it's trying to build the trend over there again, these ranges. So you're paying attention within these trending places, and goal to hit this top first. All right, and once the goal hit that top, then break through, and then 2800, or as said that on the bigger time frame. If it comes down again, okay, then again hold these ranges, okay, and continue to keep rising. So gold is still a buy at the dip. All right, gold is still a buy at the dip. Silver also to go back up. All right, so silver also go back up and claim that this top, the 35 top. Okay, another thing which you are paying, another thing you are watching very closely. Okay, this is the Australian dollar chart, and this is the silver chart. So the move started to appear over there from there. Okay, so silver went lower, bigger move happened over there. Right now we are expecting gold to continue to keep climbing and the silver to follow up and go higher. Okay, and these currencies to also bounce back really hardly and go back up, and dollar to go down. So silver to also rise. Silver was a buy opportunity at this area during the holidays, the summer holidays. It already off from that low, right? And right now you are simply looking for this to continue trending for upside. All right, and as mentioned, we still can stay within these ranges. All right, so this is what we're expecting, and we still can come back within these places, these areas, before we continue to the upside. All right, so silver also bullish. Copper also bounced back, very much similar like the others. All right, so may not go all the way to the high, the copper, okay, but if you are trading with copper, is a good lead for other commodities, so we watch it very, very closely. Okay, all right, so copper to again fall back within these areas. Okay, so copper is very, 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 very good indication. All right, and gold and silver as well. So right now I can see that on my other screen that the silver is gaining on a lower time frame. All right, silver is gaining on a 3-minute time frame. All right, there we can see that the little move is just happening over there. This little move is just happening over there. So the copper hasn't moved up. Okay, so you may see a little push up, even though gold has done over there. The gold has done that 3-minute move already over there. So short-term trade is already happening over there. All right, this is a short-term move. Okay, so trade short-term move or 3 minutes, if you guys understand that. So short-term move is just setting up over there, or Australian dollar to go back up, or New Zealand dollar to go back up, or dollar CAD to go down. All right, this little move, this little move from this much, potential, this much potential is over there. So almost a 30 pip move can appear over there in the next couple of hours. Yeah, so let's get back to the copper. So yeah, stay into that range and continue to keep climbing back to the high as silver. All right, and dollar chief, okay, dollar chief is set to fall. All right, so dollar chief is set to fall, expecting dollar chief to fall and go down. All right, so dollar chief to fall and continue to keep falling, go down. All right, so if I'm gonna pull out another chart over there, if you remember, we were expecting Australian dollar to fall, Kiwi chief to fall, this move. All right, and that move already has happened over there. So this move, we were expecting these moves, so that move has happened over there. So now we're having a leading move over there, that the chief has fallen already over there against the dollar. This is a leading move. All right, the chief has fallen, but chief was strong against the Kiwi. So go back. All right, go back. So once you see that it goes back up, you'll see that this will go down. So everything is just pointing that once Trump gonna be in the office, all right, and we're gonna have some calm in the market, dollar gonna start going down. So simple, the dollar chief to go into the other side. Okay, very much similar analysis. If I'm gonna invert the scale, I'm gonna pull out some trend lines. All right, so this move to happen, or new low. All right, a slightly bigger structure. All right, but don't think so we're gonna have that much high on the dollar chief. Okay, so go there. All right, so the dollar chief to go there on lower time frame, similar, okay, as said on the other dollar charts. Horizontal sideways move within this area at the moment. Okay, so a dollar CAD, pound CAD to fall to. All right, pound CAD to fall to, and so far hold these ranges. Okay, so we are having right now moves happening over there on the let me bring that chart. What moves are happening right now? Okay, so there we can see that. So the short term, so the dollar is, this is inverter scales, all right? So the dollar is gold is gaining, all right? So silver is gaining. So copper has to gain too, all right? And euro gaining, little gaining, pound to gain too, all right? So New Zealand dollar to gain too, Australian dollar to gain too, all right? So this is the trade you are watching right now, as mentioned over there, all right? So pay attention over there for this chart at the moment on lower time frame. So yeah, pound cat to stay into that sideways, all right? So pound New Zealand dollar to also fall. So you are looking to counter these charts. They're gonna have a huge potential over there, so looking for a big drop on these charts, the pound New Zealand dollar, and yeah, this is what you're expecting. You're paying attention and looking for them to continue to keep dragging lower, all right? So a trade over there, okay? So the trade you are paying attention closely gonna be the pound Australian dollar. This trade, this chart, pound Australian dollar, there is a trade set up, and pound New Zealand dollar. Okay, so the trade is this, already on its way, all right? But still still a time to watch for a little pullback, and can be chased, all right? This trade, so pay attention and look for a slight pullback over there somewhere within these areas, and put your stop behind that, and look for, first of all, 1-to-1 target over there. So it's little pullback over there on the pound Australian dollar, and if pullback comes over there, okay, and then the trade you are looking is this, okay? So go all the way back to that low, so you can see clearly that the retracement has already happened over there. So pound has fallen against the New Zealand dollar, or New Zealand dollar is much stronger as at the moment. Is a sign that the other also going to follow up. So the trade is here, all right? So looking for this potential to catch up, like it has removed the gains. So yeah, paying attention, looking for this to continue to keep dragging lower. Still a potential trade over there, looking for this to follow up. And for longer term, all right, yes, for longer term, we are still expecting, as said, that to continue for a big move. All right, so very much similar structure like dollar pairs, guys. All right, so we have seen a breakout of that. This is the trend, all right, the trend caused by the dollar strength. All right, so all right, so the move started from here to here, and dollar went higher, and yes, they to go down, okay, and the XY to go down too. So this might be your lead that the dollar can continue to keep dragging lower. So the bigger picture is bearish, more stable, and stable means that the risk on currencies to gain, and equities to continue to keep climbing, okay, and Australian dollar to gain. So yeah, so this is the picture for a bigger time frame. All right, so that correction to break down. So same, all right, so same, go down this area, these ranges, same analysis like I have made on the dollar. Dollar is a big factor, dollar to fall, and these two lead up, okay, same. Retracement, continue to keep falling and keep dragging lower. All right, so Uzi Chief to go other direction. So wouldn't suggest you to look for buy here on the Uzi Chief, okay, but expecting it to go back up that top. All right, so made that move all the way back to that low. If you remember the old charts, we were expecting it to go back up, go down. It went lower. Okay, so another indication that you're expecting them to bounce off the dollar. Okay, the dollar to drop. All right, so we are having strength already here on the New Zealand dollar. New Zealand dollar is a risk on currency. Chief is a risk of currency. Okay, so we got a strength. All right, so the retracement has already happened over there, here to here. Almost 38% retracement has happened over. So 38% retracement comes over there on the New Zealand dollar. Okay, one is a daily chart. One, let me make it to the daily too. So people were buying the Chief before the election was running after the safety. Now that election is over, they are getting out from the safety. All right, and the 30% retracement of this bearish trend. All right, this bearish trend started from there to there, and this might be a lead. You can say that the lead is happening over there already, that the Kiwi is gaining against the Chief. All right, and the 30% retracement comes over there at 59. All right, and a decent strength over there. Okay, so this is what you are looking for. Okay, at least remove these losses. All right, so the losses started from here. Okay, and this is the place, and it is about to remove those losses. We can pull out the favorite retracement from there to there. All right, but we haven't removed those losses yet. All right, so we are removing those losses, driven by news drove that losses, and the Kiwi is rebounding, Chief is falling. All right, so we have some rebound over there on the New Zealand dollar. All right, so the higher it goes, okay, so at least New Zealand dollar to tag that price 58. Okay, so that's why I'm saying that every time and you see that the new low is coming over there on these currencies, so dollar to go down. Okay, so some currencies are showing signs that the dollar is set to fall and has already gone down. So counter every time and you see that the new low is coming over. That's a counter move and trending move. Okay, so another indication that we have seen a move over there on the Euro Chief. Okay, so similarly Euro dollar has to rise back to these areas. So I don't have a perfect opportunity on the Euro Chief. I'm going to ignore that chart. I'm going to move on and going to move same. Okay, I don't think I need to draw a trend line again and again and showing you this, showing you the same thing which I have already said over there. Okay, horizontal ray there, these ranges, bigger structure is reversal. All right, and okay, go back up one more leg. Yeah, same structure. When dollar will fall, others will rise. Okay, same structure from there to there, trend lines, and all right, so same, yeah. So these ranges right now, I'm gonna go quickly right now. All right, so I'm gonna ignore that chart. So euro pound can bounce off very aggressively. So we may see that move. Okay, this move can drive the pound lower, crash on pound. All right, and from lows you are right now very slow moving currency, but from the lows you are paying attention on this daily time frame to hold and go back up, or even weekly chart. All right, this previous low, slow moving pair and go back up. So pound Chief to go other way around. All right, and hold these highs and go down within these ranges. I'm gonna move on. So the Chief pairs to So chief pairs to fall. All right, so chief pairs to fall. Fundamentally, there are so many reasons that to fall for longer term. All right, and as inflation has already fallen over there in the Switzerland, the news we got earlier was the bearish on the inflation. So countries are having low inflation, means that rates come down and the carry trade which we are having over there to unwind, which can drive the aggressive move lower on the yen pairs, or we can see the pressure going to be building over there on the Bank of Japan to take action for the weaker yen. So many reasons for the yen to gain in longer term. Okay, so inflation fallen below 1% in the Switzerland, and rate is coming down, CHINTR. All right, and they are saying again that they can cut the interest rate below zero or negative territory. They can go into a negative territory. So means that yen has to gain in longer term. Yeah. So feeling the heat, they are feeling the heat of the slower growth, inflation coming down, feeling the heat of the slower growth. So this might be a longer term top over there. The 180 mark is a very longer term top over there on the chief against the yen, and we can start falling for longer term to the downside. Yeah, so for right now, what you should look for, yeah, you look for it to hold these tops and stay within these ranges. All right, or if you don't want to jump into the trade, the better is to wait for the intervention. So intervention risk is also mounting over there as the dollar is going higher against the dollar yen. All right, so again, as I said, there are many factors which can drive the dollar lower. So you are watching, especially when Trump is in the office, and the dollar to go down. Yeah, same analysis. I don't think need to say the same things again and again. Yeah, so if I'm going to invert that chart, looking for this to go there, right? Go there, or slight push, you can expect it to come, all right, and then go down. So watch the resistance and look for it to go down for a big time. This current resistance as well. Okay, there are so many factors, guys, which can drive the dollar down. So yield is at the US 10-year yield is at close to that 480. Okay, yeah, so yield cannot stay there. The 10-year yield cannot stay there. So 10-year yield has to fall to 10-year yield has to go down too. So many factor over there which can. So if 10-year yield goes down, you're going to see that the dollar yen is going to go down too. So if I'm going to put some, this is the bigger structure, by the way. So there's going to be a buy opportunity. All right, so buy opportunity on. All right, so for longer term. All right, so this move to happen. So buy opportunity on treasuries. Okay, this move to happen. So if you are having access to this, all right, so this is what you are looking for. All right, this is what you're looking for. This is inverted chart. I'm going to correct it. Longer term buy opportunity. So 10-year to go down. Where is the inflation? If I'm going to pull out the inflation chart, IRYY. USIRYY, and that's the inflation inverted there. This is where you're going to see that the 10-year yield going to go. Okay, this is a longer term buy opportunity, this move. So 10-year yields to fall, dollar yen to go down, and the top is in place, almost is in place, and yen pairs to start falling. All right, so you're paying attention over there. Slight push up is possible, All right, slight push up is possible, but yes, you are looking at to find its top and stop falling for the downside. Yeah, so same slight push up is possible, but go down. So same push up. I mean, these currencies to go back up before going to get down. The CAD, Uzi, Kiwi, they have to go back up. We're expecting them to rebound over there. All right, and then go down. So dollar yen actually needs to fall first before we're gonna see. All right, so go down, dollar yen to go down. These currencies are catching up this move right now. This move. These currencies are catching up that move. All right, she's still behind that. Still behind that. All right, so they're catching up that move. So dollar yen to fall off. So Euro CAD, I'm going to ignore these charts. All right, so if you traded this in Chinese yuan, you're expecting some kind of hawkish comments or maybe intervention, or you're expecting People Bank of in China to set the yuan fixing rate at a lower price. Okay, so lower price. I haven't checked it today. Yeah. So where they're setting, if they are setting somewhere close to 720, right, then you're expecting it to go to at 720 from that high fall from that top. Or if they are setting it very low, then go to there at that price. So yeah, go down. Okay, so I'm gonna look at the equities and then going to come back. So there is a buy opportunity setting up over there on the US 30. So US 30, you are looking for that to claim all-time highs. Strong trending chart. All right, so I'm going to pull out the moving averages, and we are holding the daily trend. All right, so go back up. When market open during the New York session, you're looking to hold, all right, these ranges and go back up. So this is a daily time frame. This daily time frame to hold, and you're looking for this move. And in best case scenario, continue to keep climbing for another extension beyond that high, and yeah, keep climbing. Can go up to 50,000. 50,000 is very, very far away, but yeah, still can continue. That's going to be a little unrealistic at the moment, but yes, keep getting towards 47,000. All right, this is the move you're looking. So this is a bigger daily time frame. On lower time frame, what you're expecting is that the price simple is that they hold this low. All right, this low, hold this low, and there is opportunity. This is a buy setup during the New York session. All right, so this low to hold. All right, so price to go back up, this top and break through that top, continue to keep rising. All right, this opportunity. So this is a longer term opportunity. This is a short term opportunity during the New York session. All right, so this is what you are looking, price to go back up. This is a short term opportunity. So during the New York session today, you are expecting it to give you this trade. All right, you're looking at to hold these lows, and okay, so this opportunity you're looking for during the this opportunity. So very much similar, like if I'm gonna show you that a 1 hour time frame gonna be much more sensible rather than. Okay, so which chart gonna be a good example for you to? This is also a good chart to understand that. Okay, so we got a sell off yesterday. First of all, we got a strong buying momentum over there on the euro. Okay, bang on, we got that buying momentum over there already on the US 30. Then we got a sell off. Trump denied the tariff reports. We got a sell off over there. Okay, we got a rebound over there. So dollar dropped, right? So these risk on currencies, they rebound. All right, but we can see that the US 30 hasn't rebounded yet. Okay, so this is the move you are looking for during the New York session. All right, so, or if I'm going to look at the Australian dollar, risk on currency, boom, bust, recovered. All right, so boom, bust, did not recover. All right, so you're looking for that to recover. So, yeah, so same here, boom, bust, recovered, boom, bust, recovered. So boom, bust, did not recover. So recovery. Okay, so if I'm gonna look at the Nasdaq, slight recovery, and if I'm gonna look at the Nikkei, all right. So Nikkei has recovered even more than. Okay, so we got the drop, right? We got. Let me find the dates first. Okay, we got a strength, and we got a strength till that, and then we got a sell-off. All right, so we got a sell-off during the we got this rise. Okay, so we got this rise, and then we got a sell-off. We got a rise, we got a sell-off. Trump denied the reports, right? And during the Sydney session, we got a decent strength over there on the Nikkei index, and the Nikkei index is pushing higher. So we haven't got the strength over there. Okay, so we're expecting the Dow to recover. Yeah, so many indications are over there that today the New York session going to be good for the recovery of the US equities, as dollar has already lost its footing during the day. All right, so yeah, as mentioned that earlier at the start of the meeting, that price can stay. We are getting back within those ranges, so it shouldn't be a surprise. So we're holding those ranges, so we can stay within those ranges for a while before we're gonna have a direction. So equities, okay, so there are going to be a buy opportunities on the US 30 for even short term to a bigger daily time frame. All right, so Nasdaq index is pushing higher. I wouldn't suggest you to do anything, but yeah, still bullish on the Nasdaq index on lower time frame. Yeah, it's climbing and still can continue to keep climbing. So the previous charts posted on the Telegram, we were expecting it to hold this these lows and this pullback, if you remember. So since then, it's just in a nice trending market. So if it pulls down to this low, okay, so you're trading within these ranges and looking for this to break through, still going to be a buy opportunity within these areas. All right, so I'm not anticipating it to drop that much low. Again, I'm just simply anticipating it to it can stay within these ranges, okay, and then can pop up for upside. So not a best buy opportunity at the moment for 1 hour time frame, but during the day, lower time frame, you can have a short-term buy opportunity on the Nasdaq. Not a perfect as with compared to the Dow. As Dow, we can see that. Okay, the reason why Dow is good, because the Dow is down almost 7% from the high. Yeah, so almost 7% at this low, 7% low from the high. So we are not having that much drop on the Nasdaq. Okay, so Nasdaq is just 2.5% lower from the all-time high. So that's the main reason. Same goes with the S&P 500. Okay, 1.75. So that's the reason they're going to be buying them at the high. So small caps, yes, 11% down. Okay, and up to 8.5%. So some recovery over there on the small caps. So small caps to also recover and go back to the highs. Similar trending move on the small caps like we are expecting on the US30. Yeah, we're gonna look at the Bitcoin. All right, so this is what you are expecting. So these are the equities. All right, and I'm gonna look at the individual stocks. They have recovered really well. So Nvidia recovered, shown you in the previous weekly market outlook. All of them to recover. They recovered all-time high, hitting all-time high. Okay, so we may not see a move like this on the Nvidia up to 200. All right, at the moment, till something big is going to happen over there. The reason is why. Let me pull out some indicators on it. Okay, so if we're gonna look at the market capitalization of this chart. Okay, so we are already close to 4 trillion. This is very, very, important piece of information, guys. I mean, if you are still thinking that the Nvidia continue its trend, okay, so if I'm gonna more higher, yeah, it can tag the previous high. I said that earlier that the Nvidia can go back to the previous high. All right, so from that to that high, okay, how much market cap increased? Almost a trillion. Almost a trillion, exact 800 billion. All right, so you need another $1 trillion market cap for this to go from here to from 150 to 180. Another $20 move on, and the move we got here on the 25. All right, so we got the $25 move, and we had 25% rise in the market capitalizations, or 800 billion. So for another rise like that, for another $25 rise like that, you need another 800 billion into the market capitalizations for the Nvidia to go from 150 to 180. So that's so much money. That's so much money. All right, so the point here is that we may stay sideways like we have seen there, okay, rather than having trending move over there on the Nvidia. Whatever the company is saying, that the company right now saying that the worth of the Nvidia is the 10 trillion. The 10 trillion is so much money, guys. $10 trillion is so much money. So sideways market on the Nvidia. Apple again heading higher, expecting it to continue. Yeah, so we said that on the Dow. Okay, this move Dow, I've shown the Dow. Okay, if Dow goes higher, you're gonna see that they also gonna go higher. All right, so the move is to Microsoft is still in the same ranges. Okay, so this move to happen. All right, so go this move to happen. Google already at the top, so Amazon already at the top, like Nasdaq 100 index. So AMD is more bearish, so I mean more bearish, having more potential over time. So go all time high. So Meta is going higher. Tesla, if you remember, that was saying to you that the Tesla gonna go higher, gonna claim the all-time high. So it broke through the all-time high, right? And we broke through the all-time high. It was a nice decent move, and yeah, the trade has gone. I have shown you this chart somewhere here within these areas. Yeah, the Tesla has just climbed up so aggressively for upside. So yeah, limited strength on the Tesla. Yeah, so the move is just gone over there. So Netflix also gone. Yeah, on lower time frame we can push up back to the top. All right, so now let's look at the crypto. Bitcoin. So Bitcoin made its move. Let's look at this previous chart. Bitcoin. Okay, so Bitcoin, we got that leg. That's a decent leg. All right, so finally we got that leg. This leg from 15,000 to 100,000. So what has driven that move? You can say that fork or whatever, blah blah blah, that these are the reason that which has driven that. Okay, so the main reason which has driven the Bitcoin to go that much high are these charts. All right, so yeah, I have posted that charts way before. So the last time when we have got this trend, okay, on the Bitcoin we got that move. I mean, the 2 years yields went above the, rates went lower simply. Falling rates caused the Bitcoin to rise back in 2019. All right, so rates were higher. The rates were higher. The rates were higher. Short-term rates were higher, causing the Bitcoin to go into the correction. Okay, we were expecting this to rebound, okay, and Bitcoin to rebound. So let's look at this chart, how this chart has developed over there. Yeah, so you can see that the Bitcoin has gone, but you may have not seen that updated chart. So let's look at that 2 and 10 year yield. The 10 year yield is above the 2 year, or close. Let's see. So inversion is okay, so this is the chart, that chart. Yeah, so this is Bitcoin chart, and we had that 2 months. All right, so let me go to the 2 month first here. 2 month. All right, so we are coming out from the inversion. We're coming out. This was the bearish move. First, before we had that, then the bearish move, and then we were coming out from the inversion. This is what I was saying, what I was expecting into that chart. So the inversion to come out. All right, this to come out. So it went deep up to 1%, and then it's steepening. So going up. So yeah, this is actually telling us that the inflation has dropped, rates are going down, all right, and causing the free money or easy money to come into the market, which is actually driving the Bitcoin higher. Yeah, and that was the main logic behind these charts. All right, so we have seen even the strength on the copper went higher, and the Bitcoin, we were anticipating it to. These are, old charts, all right, very old charts. So January 23. Okay, so yes, this is the 2 year yield. Now 2 year yield is falling, okay, and the Bitcoin is catching up. Not just catching up, it's gone much higher now. All right, so yeah, same updated chart. I have updated that chart again. All right, and this is the same yield curve. Yield curve is disinverting, and Bitcoin was climbing and still climbing. So what is next is the question. Okay, these are the old charts. So what is next from Bitcoin at the current price? So what's next? Next is that we still can see that the inflation is falling. Okay, what is the target? the target is 2%. The Fed is looking for the interest rate to fall to 2%. Inflation to fall to 2%. All right. So if inflation goes to 2%, rates has to come to 2%. All right. So right now rates are still higher. So means that the easy money is in future. We are going to see that again. So cheap money cost, which is still a bullish story for the Bitcoin in longer term. Longer term rate still has to fall, and as inflation is falling, that means the Bitcoin still has to continue its trend. Okay, but at the current price, okay, the main reason the main reason right now which caused the big money to jump into the comments which came over there from Trump during the campaign caused that aggressive breakout to come. Okay, now he's going to be in the office. We're going to have the facts means that, you know, less likely we're going to have another breakout over there anytime soon. All right, okay, and if he is going to say something after coming into the office regarding the Bitcoin, like reserves or blah blah blah, okay, that, or if the big money from this is just unknown factors. We don't know either they're going to do this or not. I mean, the Fed is going to buy the Bitcoin. They denied. All right. If so, then you can expect it to us. I mean, couple of hundred billions, like 400 or 500 billions, come into the market, and then you're going to see another spike over there. Okay. If we're going to do the similar comparison which I have done on the Nvidia. Okay. So I do have that chart also. I'm gonna go there simply. Okay, this is the cap, Bitcoin market cap. So from daily time frame, so how much money came into the market since from this low to that high. No, I wasn't searching the indicator, I was searching the market cap. Okay, so we got 1.8 trillion. Okay, we got 1.8 trillion from 49,000 to 108. All right, so for Bitcoin to continue to keep climbing, yeah, you need that money. All right, so you need that much money to just keep coming into the market, and Bitcoin to keep its trend intact for more upside. So right now I don't see that you're going to have another 400 or 500 billion coming into the market, and you're going to have another breakout for upside, and Bitcoin is hitting somewhere to 150. All right, 150 or 130. All right, so yeah, so it very likely you're going to see that it's going to stay in the ranges. All right, so ranges, the current ranges which we are having at the moment, before we're going to get a breakout for upside. So for a couple of weeks, maybe months, 2-3 months, it can stay into that range. All right, and then something, you know, fundamentally happens, and then we can see another breakout. All right, so who's going to buy that 400 or 500 billion Bitcoins at 100K? So you need someone to come into the market with that much big money to push prices for more upside. All right, so something fundamental, strong reason you need for the next breakout. So the point here is that we may stay how long we spent into that correction. All right, so how long we have spent into that correction. So we spent almost 245 days. Okay, so 245 days. So the point here is that more likely you're going to see profit taking over there, and price can stay into these ranges for a while before we're gonna have, you know, something, you know, different over there. All right, so we already spent 57 days. Price is into that correction, 57 days. So making it more simple, price can stay within these ranges for a while, or even this can get into a bigger correction. Okay, I cannot rule out the Bitcoin to fall back to 70 or 65 areas. All right, so we cannot rule out that. Okay, we can even correct deeper. The previous correction, right, this correction went up to 50%. All right, so yeah, so 50%. All right, this correction went up to 50%. Yeah, and these went much lower, so you cannot rule out that correction to fall up to 50%, right? So, or below 50%, which is 80k. So yeah, prepared for the correction, and more likely we're going to stay into these ranges for a while. And yeah, that's the Bitcoin analysis. You need so much money for the trend to stay intact and break out for more upside. You need 400-500 billion for this to push up for another 10 or 20k or even 30k. Yeah, it's a sensible thing, guys. It's not a you know, common sense. You just use your common sense. You need that much money to the price to push that much higher. Yeah, if it pulls back deeper, all right, it can claim the previous high again. So dip gonna be a buy. Yeah, dip gonna be a buy. A decent dip gonna be a buy. So stay into these ranges. If you're trading, just keep trading on your lower time frame. So if you're looking to buy for longer term, there is no reason for buying the Bitcoin for the longer term. Ethereum, I'm anticipating Ethereum to break the previous high. The only reason is the supply of the Ethereum, which is not letting this to break the previous high. All right, so I'm anticipating it to spike above up to 8,000. Yeah, 8,000. So it's a slow climber. So climbing up, but slowly, not so aggressively. So yes, yeah, just keep pushing higher. So we don't have a perfect, yeah, but dip gonna be a buy. Right now I don't have a perfect opportunity on it. Other coins, I'm not tracking the other coins at the moment. All right, so we were tracking when they were low. All right, so, and they moved. All right, so they moved. This is also moved. So Solana also moved and claimed the new high. All right, so yeah, so yeah, still trending as long as we see that the Bitcoin is rising. Oh, we're gonna see if Bitcoin claims the previous high. Okay, this will also go back up. And these are the ranges, so go back up and retest that top. BNB, yeah, also gone. Okay, chart was posted back in there, right? So gone back up. So they are at the high. So I wouldn't suggest you to buy them. Some of them they spiked up, all right. So some of them they are still, yeah. So we're expecting spiked up, but they did not spiked up as this spike we have seen on the Bitcoin. Okay, some spike came over there. Yeah, so some spike came over there. Some coins just spiked up, some they didn't. So these coins also spiked up. ADA, old coin, spiked up, went higher too. OITA spiked up, went higher too, but they did not claim the new high. Doge also spiked up, but did not break the previous high. Yeah, but decent spike came over there. All right, so Lumen, Stellar also spiked up nicely, went higher, but did not break through the previous high. So these were the coins which I was saying to you guys, we can see spike on them, and they did exactly spike. Some of them spiked nicely, but some of them they did not, right? So 2 spikes came over there. I posted these coins on my profile, TradingView profile, back then. All right, so that's it. Enough. And yes, you're watching the Dow for the day. During the New York session, we got some strength over there. All right, so it's already pushing higher, expecting it to test that low. But yeah, yes, when market open, it can test that low and then can climb up, or maybe just can spike up very aggressively and can continue to test that top. All right. So XRP, yes, XRP also went higher. XRP also went higher. XRP. But you know, if you got you know, long on them and they went higher, so don't look for, you know, more bullish move at the moment. So it's a time to, as said, that we may see a deeper pullback. It's a time to take out, rather than hoping for the unimaginary numbers. All right, so yeah, I said that you need another trillion for the Bitcoin to rise for under 50,000. Yeah, so which is less likely at the moment. So more likely we're gonna have a deeper pullback. So I wouldn't suggest you to buy the XRP at the current price or look for continuation. So more likely we're gonna go down, right? It's more likely we're gonna go down. So a kind of neutral analysis I'm having. So if Bitcoin goes below 80k or 75k, obviously you're gonna see that these coins gonna dump more faster than the Bitcoin. So wouldn't suggest you to look for buying over there. Okay, so thank you very much for coming, and we'll see you back again for another in another time. So till then, have a good day.